Hey guys, welcome back to another episode of Market Mastery. Just wanted to do a quick video update because there has been a lot happening in the market over the last couple of days. Now, firstly, to start off, we may as well have a quick look at Bitcoin. This range through here, especially on the daily time frame, this daily close on the low, to me, daily range low, which is basically the selling climax daily close, right? That is the most important level in the market at the moment. And we have been bouncing off this multiple times. Now, if that can continue to hold, I'm going to believe that this is most likely the accumulation range for the next cycle. It's starting to look more and more like it. You're seeing a few guys even post charts like this with, the Adam and Eve type structure set up, which, eventually ended up looking something like that for the last bottom, but we won't get stuck into that too much. Really nice little pump off this the other day. Put out a lot of comments and posts and stuff like that about, the weekly bullish divergence and everything like that was in play on the stock market, on NASDAQ as well, and in BTC. And obviously the daily bullish divergence back here. But this pin bar that got put in here was really telling. And from there, basically, we had another day. It must have been back here when we had the CPI data came out and the market didn't dump. So we nuked initially and then fully reclaimed it. If you look on the SPX, that day back here on the 13th of October was a really strong gaining day. And it was a massive swing failure pattern for the market as a whole. And then, the next day we pulled back and then rallied off that range low again, which to me was actually quite impressive. Now, we sort of had the follow through of that and putting an inverse head and shoulders. Prices broken out of that and now coming back to retest this range high. Basically, I don't want to see this level through here. We really need that to hold, but the main level, I think, is probably this one. It can come down and retest this level through here, which is 3,759. And the higher top of the range would be 3,790, right? So it could come down a little bit further into that and then bounce and continue to push higher. And then I would be looking for this major downtrend resistance level. I think the market wants to push up to there, even with the bad earnings that came out today. So just quickly going to catch you guys up on that. Amazon came out and missed earnings pretty badly. Down around $8 billion to estimated, and it tanked quite aggressively, 20% pretty much instantly, right? And then half an hour later, Apple came out and actually beat its earnings, only just very, very slightly beat its earnings. Apple was originally down post by about 5% and then pulled all the way back up to pretty much, I think maybe it closed a tiny little bit up. I don't think there's any post-market happening much at the moment right now. It's not listed anyway on the chart, so I can't see. But the last I looked, it had come back up to where the close was. So Apple pretty much saved the market, and you can see the reaction here as soon as the market closed at 4 p.m. We nuked down very aggressively. Apple earnings came out at 4:30, and we bounced pretty much from there and have sort of been recovering. Now, on the futures market, on the stocks, we are below the range high at the moment. And, in here, the inverse head and shoulders pattern isn't as obvious as what it is on the actual market. And I think the actual market counts for more, to be honest. So it's something very interesting to look at through there. The other one as well that's quite interesting at the moment is junk bonds. Right. Let's have a quick look at that because there's a really nice inverse head and shoulders on junk bonds. Right. And that is an indication for me, if we're seeing a reversal in junk bonds, that there's an indication that there's a lot more appetite for risk coming into the play right now. There's a little bit happening, especially in the foreign exchange market. We'll go quickly have a look at that. Now, first off, we'll have a quick look at the DXY. Right, so DXY looks to be like some sort of a topping action, even here on the 4 hour, right? So we had, this is almost like an Adam and Eve top, right? So looking at that, multiple SFPs through here, and then we roll over back down to first level of key support, which was the buying climax swing high of the last sort of bull flag that was put in before we moved up one more time, right? If we look on the higher levels on the daily time frame, there's a lot of bearish divergences being getting put in. And then the weekly, we had this really nasty candle back here a few weeks ago, which sort of was a bit of a signification of a possible top, or at least, some consolidation pattern needed, right? And that sort of marked as well the initial beginnings of the Japanese government selling their US dollar reserves. Now, something really interesting happened recently with that as well, is that the Japanese finance minister came out and said that their selling program to restore basically strength in the yen. They're doing that in conjunction with the US Treasury. And then the US Treasury came out and they're like, we don't know what they're talking about. We're not involved at all, which is obviously total BS, right? Usually when the US says they're not doing something behind closed doors, probably means that they're actually doing it, right? So in my opinion, what they're doing is they're sending US dollars to keep the Japanese government's US dollar reserve. They don't want to deplete that. There's obviously they want Japan is one of their closest allies, especially in Asia. They're right next to Russia. They're right next to China and North Korea, right? So they don't want the Japanese government bankrupting themselves, trying to save themselves from the dollar completely destroying their economy, right? So that's one thing to think about. I think something is happening that they're not sort of telling the public. So that's definitely something to keep our eyes on anyway. I mean, all we can really do is look at the chart and see that the Japanese yen is actually has been performing quite well recently versus the dollar, because they are selling en masse dollars back into yen to sort of support the yen. Now, it's going to be interesting to see how long they can keep it down for, and if the US government eventually comes out and says, okay, we actually are sending USD through back channels to them, right? So it's going to be an interesting one to take a look at. The other one I wanted to get up was reverse. The reverse repo market is something that Arthur's been talking about for a little bit now. And basically, this is a market that the Fed basically uses to take money away from the banks and out of the economy. And he calls it dead money, right? So when the money comes out of the reverse repo, which is pushed up to 2.4 trillion at the end of September, and it has been coming down quite aggressively just recently, along with the way that the market is moving to the upside, right? Sort of timing quite nicely with that. We are seeing the reverse repo start to come down. So if we see that start to come down, basically that means they're taking capital out of reverse repo and they're putting it back into the banking system, and it becomes what he calls live money. And it's basically has the same effect in the economy. It's adding liquidity back into the markets, has the same effect of stimulus. So this is one chart to keep our eyes on, because if this goes into a downtrend quite aggressively, as you can see, they ramped up reverse repo repurchasing, right? Pretty aggressively since the start of April. So if this starts to come back down, we will see obviously Fed balance sheet increase, and it will be bullish for all risk assets like Bitcoin, for example, or your altcoins, everything like that. Okay, so back to the charts. NASDAQ as well, we're sitting on really crucial support right now, and that to me as well looks like an inverse head and shoulders. So sitting on basically 11,000 right now. That needs to hold, in my opinion. It's a pretty nice level. It could come down again a little bit further to basically 10,800, and then end up rounding back out and pushing up again to have another crack at this neckline. But tech has been taking a bit of a hit. So we are, for this to rally back up to its downtrend line through here, and same with SPX and Bitcoin to get a push back up to range highs, either 22,500 or 25K, we are going to need a dovish rate hike and a dovish Jerome Powell at FOMC, which is only next Wednesday. It's not that far away now, only a couple of trading days away, right? So Something to think about. The ECB came out this morning. They rate hiked 75, which was expected, but they spoke very dovishly, about things starting to better and, potential for lowering the pace of hiking rates soon, but they will continue to hike rates until they hit their target for inflation. I think we're going to see Jerome Powell come out next week and basically speak along very similar lines. They're probably going to still do 75, but I think they will start to talk about lowering rates soon, and that could get the market very excited. So be careful to not get caught off guard by a big pump over the weekend, right? So on Wednesday next week. So one thing to think about, this is one of Arthur Hayes's posts I was just mentioning before about Yellen. So you can go check out that if you want more information on what I was talking about in further detail. One of the things I was want to talk to you guys about as well is basically BlackRock economists have come out and they're telling the financial advisors that the next Fed meeting, which is FOMC on Wednesday next week, we're going to get 75 most likely. That's expected. Will include pivot language, right? So basically, that what they're saying is they're expecting the Fed to come out and speak very dovishly about the markets, right? So we've had super hawkish Fed, which means bearish, right? They're pushing things down, they're raising rates. Dovish basically means they're going to be talking about lowering rates and pausing and lowering the rate of rate hikes, right? So I think that is probably the most important thing. Just a signal that they're going to start to slow down the pain that they're inflicting on the economy by raising rates so fast could give a little bit of a spark to the market, and we could see, Bitcoin go back up to range high, and we could see this inverse head and shoulders play out and push back up to this trend line up here. And that, I think, this trend line through here is the most important line in the market. When we finally do break out of this trend line, it's going to be a very big signal that we're moving back into a bullish trend again. You don't want to say bull market too early, but definitely moving back into an uptrend for sure, right? The other thing to think about long-term as well is, okay, we've just started to see earnings really start to hurt. Earnings could get really bad, and then we end up seeing layoffs, and then those layoffs end up turning into, high unemployment. And then obviously the Fed would have to stimulate from there, but we could see a bit of a downturn and actual real recession hit. So not just negative growth for 2 quarters, where we actually get negative growth and then also really high unemployment start to kick in as well. And, there's no way they can't say that's a recession when that happens, right? So we could get a breakout of this trend line, push to the upside, a bit of a miniature rally, and then a rollover into next year, and then finally bottom and take off from there. So that is one option I don't think that we can rule out and have to be aware of. Just because we're bought in here, this could be a temporary bottom, right? If things do play out well, next FOMC, and then inflation data comes out a week after on the 13th of November, right? If that's low as well, and we start to look on signs of improvement, we could get a rally that is fairly strong for a little bit. So don't get too comfortable, because that could easily roll over, come back to lows, even make a new low if the economy really starts to, turn bad next year. Because the rate hikes that we've been experiencing this year are some of the fastest ever in history. But the thing to remember, guys, is that they don't all inflict the pain straight away. It's sort of a lagging indicator. Now, speaking of lagging indicators, the other thing I wanted to sort of discuss with you guys was rents starting to finally roll over, right? So basically, this is month on month, right? So you can see how it sort of took off very aggressively end of last year, etc. Month on month, the last 2 months, we've actually started to see the percentage of rents actually start to decline again, which, usually it's going up, it's going down a little bit, coming up. And then obviously after COVID, it went absolutely nuts, right? Now, this was one of the last major sticking points for inflation. So I'm expecting that if rent was coming down month on month, that means shelter mainly, right, which is the last sticking point for CPI, is going to be coming down now for the next couple of inflation prints. Now, the other thing to remember as well, our inflation prints from October, November, and December, these were above 6, 6.8, and 7.0. So, previously, we were around, at the start of the year, we were nothing, just coming from 1.4, and then we started to really have the inflation kick in, right? So when you're comparing numbers against, lower inflation numbers, it's easy to have a higher inflation, right? When you're comparing against 6.8 or 7.0, you're already comparing the prices and data to already high numbers. So it's easier to get a lower inflation rate. So we could see CPI down October, November, December, and also a pivot really start to kick in terms of the Fed talking about lowering the pace of raising rates and potential pausing at the start of next year. So that could put a little bit of a fire in the belly of investors who have massive amounts of capital sitting on the side of the markets right now, just waiting to deploy into anything. So we're at all-time highs for capital on the side of the market in US dollars, just waiting to be deployed into the market. So any sort of rally and excitement that gets kicked in could have a little bit of legs until the next sort of bad news sort of kicks in and makes everybody freak out and fear again, right? So that is one thing to think about. The other thing to think about as well is majority of the market is very heavily short at the moment. Puts at an all-time high. And, realistically, let's be honest, retail usually always gets burnt by going very bearish at the very bottom of the market, because then the reason why that is because when it finally starts to flip in the other direction, they don't flip fast enough, and then they get caught off guard, and it's the liquidations of their shorts and their puts that actually pushes the market up high enough to create, to put us back into that uptrend, right? So it's just something a little bit to think about at the moment. Obviously, something bad could happen. We get horrible data, China invades Taiwan, and we're going lower, right? But we can't trade off that. We can only trade on the information we have at hand and try and make the best decisions possible. For me at the moment, that was pretty bad earnings, but the market does have a little bit of a habit for shaking off bad earnings. So I wouldn't be surprised if we shake this off and we start to go back into an uptrend. And if we do give a fairly dovish Jerome Powell on Wednesday next week, I think we're going back up to test these levels on NASDAQ around 12,200 and test this downtrend. On SPX, I think we're going to come back up and potentially test this downtrend here at 4,000, 4,100. And Bitcoin as well could potentially have a rally back up to at least test 22,500 or 25,000. I'd be pretty happy with 25,000 getting tagged again. So let's see what happens and what comes out over the next couple of days, guys. Obviously don't have a crystal ball. I can't predict what's going to happen, with the war. I can't predict what's going to happen with China and Taiwan. I can't predict what's going to happen or how Jerome Powell is going to speak at FOMC next week. Obviously, all we can do is make estimates on the information we have at hand. But, I believe that the market wants to move up. Even if we are going to go lower, I believe we need to go up a little bit more to wash out some of these shorts, wash out some of these puts, get people to buy back in, and then the next bad news wave comes out and we roll over one more time. That's if we're going lower, right? So in the short term, I'm betting on up at the moment. Let's see how it plays out. Just a quick one on Ethereum. Ethereum BTC is massively outperformed every time the market does turn bullish. So this could get exciting. We've been in a full year, a bit over almost 2 years now of sideways action, a huge bull flag. That could explode up higher if we do get some bullish action, because we do know that Ethereum, since the merge, doesn't have as much selling pressure from the miners. So that's something to keep our eye on. I do believe that when we do have uptrends or burst the upside, that Ethereum is most likely going to outperform BTC probably for the next decent amount of time, because there is a real supply shock issue with Ethereum, because there's only what's on the markets. There's nothing really being mined anymore, being put onto the market. So there is going to be a fair amount of supply squeeze until we see higher prices that people are willing to sell at. So in the meantime, I think Ethereum setups will be worth taking more over Bitcoin setups, because when they move to the upside, I think it's going to move faster. Obviously, it will outperform to the downside a little bit as well, but I believe it'll be a bit asymmetrical to the upside. Dogecoin going sideways in a big accumulation range. This is one to watch because if this breaks down, it'll probably be a bit of a red herring for the whole altcoin market, breaking down sideways, breaking down, rolling over. But to me, this is really starting to look like more of an accumulation range. So I wouldn't be too unhappy with accumulating down somewhere at this range low again if we do get it, or even some type of a bull flag through here. Obviously, that took off recently with Elon Musk finally buying Twitter and people getting excited about Dogecoin being integrated somehow into a payment system for Twitter, right? Which, let's be honest, is a realistic possibility. The other thing as well is XRP. Right, that's also in a bit of a bull flag here. This is a lower time frame on the 4-hour. Came down, retested this level. It is sort of in a bit of a symmetrical or ascending triangle. So I have to see how this plays out, but it could get another rally up to its high and then break out of that, especially if they start to get more good news out of that court case. But one of the main ones that I have been watching as well is the Grayscale Bitcoin Trust chart and a reclaim of that range low. Let's see how that holds up. But one of the other ones that I have been trading as well is Solana, right, where it range lows through here. I think, this is not a bad idea to be getting involved with Solana through here. So for me, I've been just, accumulating down here at the range lows, looking for a move to test range high up here. Right, if it rolls over, I'm out of the market. Can't win every trade, but you have to be risking something to make profit, right? That's the game that we play. And the other one as well that has been really interesting is the shitcoin perp index, right? So these are the two targets. So I've been talking about this for a little while now. If you've been watching my other videos and posts in Discord and in Facebook, came down, selling climax. Now we rallied back up to range high, rejected off there perfectly. This level through here, right, which is our order block resistance, right? If we draw a line from the bottom of that, perfectly SFP that level, then roll over, right? Going to a falling wedge. Now we're broken out of that falling wedge. I would like to see, right? So this is the same daily close low on Bitcoin. Would like to see price come down, retest that, and then push up into 2,700. And that would be a very good indication that the rest of the shit coins are going to get a little bit of love, right? So basically things, in my opinion, aren't looking too bad at the moment for a little bit of a burst to the upside and catch a lot of people off guard. Even though we had bad news, we had bad data come out for CPI and the market has been rallying ever since. So when we have bad news and the market doesn't dump off or doesn't return into a downtrend, which to me, it's not looking like it has yet. Yes, we had NASDAQ dump off pretty aggressively. SPX had a little bit of a sell-off, but that's really nothing compared to what we have sort of seen, when there was bad news and the market was bearish. Like, look at the results when we had bad news and the market was bearish. It just absolutely nuked and kept going, right? This has had a little bit of a sell-off, but it's already pushing back up. So that's sort of like, to me, DAC here, when we had really bad news with CPI data, broke down, bullish engulfing, right, on the 4-hour, retested, and we're being into a little bit of an uptrend, right? So now what we need to see is, can this hold, and can we make a new higher high here, and can we break out of this weekly resistance, right? This was the level when we were back here, guys. This was the level I was saying that I think markets can try to push up into, right? We have tagged that level, so we could roll over. But I believe that the market wants to fight and push back up, just because we haven't. That was really bad news that came out today and the market didn't sell off. So that's sort of starting to say to me that, the pot of gold is to the upside here. The liquidations are to the upside because everybody's already short. There's not enough people left to sell. Everybody's already sold. That's a willing seller. So I think the market does need to move up to the upside either way, even if we are getting more bad news. But I do feel like we're sort of at a turning point where, a lot of central banks are starting to pivot You know, there's a lot going on in the FX markets as well to stabilize, to bring the US dollar down. All that is bullish for risk assets. We're starting to see junk bonds play out at a high time frame, inverse head and shoulders, right? That's telling us that there's people out there, probably the funds, moving capital across into taking more risk now. So in my opinion, it's definitely the time to start paying attention, because we don't want to get left behind and miss out on the bottom. So worth taking a little bit of a risk here, in my opinion. So I have. Up to you how you play it, not financial advice. But thanks everyone for tuning in. I'll catch you all in the next video.